Did you know the British pound just hit $1.21 against the US dollar, its lowest point in over a year? It's falling so fast that data is out of date almost as soon as it's reported. This isn't just about numbers on a screen. It's a wake-up call for the UK economy. From skyrocketing debt to recession fears, the pound's free fall is exposing cracks in the system that could affect everyone. So, how do we get here? And what does this mean for the UK's future? Let's unravel the story behind the headlines. The fall of the pound, a crisis unfolding. The British pound is currently in free fall, a term that aptly captures the steep and seemingly unrelenting decline of one of the world's oldest currencies. Since late September, when the honeymoon period for the newly elected Labour government came to an end, the economic landscape in the UK has shifted dramatically. Today, the pound is trading at just over $1.21 against the US dollar, marking its lowest level in more than a year. What makes this decline particularly striking is its speed and severity. In fact, while preparing this discussion, the data has needed updating multiple times because the pound has continued to lose value almost by the hour. Over the past 5 years, the pound hasn't reached these levels of weakness since March 2023, a time of economic uncertainty. The most significant dip before this occurred in late 2022 during the tumultuous tenure of Liz Truss, the shortest-serving prime minister in UK history. Truss's 49-day stint in office was marked by policy missteps, including a highly criticized mini-budget that proposed unfunded tax cuts. This triggered a loss of investor confidence, which sent the pound plummeting to its lowest level since 1985. Many observers are now asking if this latest decline in the pound's value can simply be attributed to the strength of the US dollar. While it's true that the dollar has been performing well against most currencies due to its status as a global safe haven, the issues surrounding the pound run far deeper. The British currency has been underperforming relative to other major currencies, revealing systemic vulnerabilities in the UK economy that extend beyond global currency trends. A global perspective on currency performance. To understand the severity of the pound's struggles, it's useful to compare its performance to the world's top 10 traded currencies. In 2025, among these currencies, the British pound has emerged as the worst performer, falling by an alarming 3.3% against the dollar. This stark underperformance underscores the specific challenges the UK faces, which are exacerbating the pound's decline. Currency traders and hedge funds have seized upon this volatility, with the British pound becoming a prime target for speculative bets. The practice of shorting currencies, essentially betting that their value will fall, has a long history, and the pound has often been in the spotlight. The most famous example occurred in 1992 when financier George Soros shorted the pound, earning over $1 billion and forcing the UK to withdraw from the European exchange rate mechanism. Fast forward to today, and we see echoes of that infamous episode. On January 8th and 9th, traders placed billions of dollars worth of options contracts betting on the pound's continued decline. These contracts predicted that the pound would fall below critical thresholds, such as $1.22, $1.21, and even $1.20. The sheer scale of these bets is staggering, with nearly $1.8 billion worth of options predicting that the pound could drop as low as $1.12. This wave of speculative activity is not just about taking advantage of volatility. It reflects deeper concerns about the UK economy. Investors are not simply betting on short-term movements. They are signaling a lack of confidence in the country's economic fundamentals. The UK's economic woes. The United Kingdom's economic struggles are rooted in a series of interconnected challenges, each compounding the impact of the others. A significant factor contributing to the crisis is the country's persistent trade deficit. As a net importer, the UK consistently spends more on goods and services from abroad than it earns from exports. In October 2024, this imbalance reached a staggering £3.7 billion, up sharply from £2 billion in August. The falling value of the pound has made the situation even more dire. Essential imports, such as energy, food, and raw materials, have become increasingly expensive, further widening the trade deficit and putting additional strain on the economy. Compounding the issue is the UK's stagnating economic growth. The country officially entered a recession at the end of 2023 after experiencing 2 consecutive quarters of negative growth. While the economy showed some recovery in early 2024, with 0.7% growth reported in the first quarter, that momentum quickly faded. By the third quarter, GDP had flatlined at 0%, and more recent data from September and October revealed month-on-month declines of 0.1%. These figures strongly suggest that the final quarter of 2024 will bring another period of contraction, raising the specter of a return to recession. Adding to the economic turmoil is the government's mounting debt and the rising cost of borrowing. After coming to power in July 2024, the new Labour government pledged not to increase taxes, choosing instead to fund its growth initiatives through increased borrowing. However, this strategy has led to a significant rise in the public debt-to-GDP ratio, which climbed from 96.5% in July to 98.1% by the most recent report. With GDP now in decline, it is highly likely that this ratio has already surpassed the critical 100% threshold. At the same time, bond yields, the effective interest rates the government must pay to borrow, have surged to their highest levels in 25 years. This means that not only is the UK borrowing more, but it is also paying significantly higher costs to do so, further straining public finances. Why it matters. The current crisis carries serious implications for the UK economy, its citizens, and its political leadership. One of the most immediate concerns is the impact on inflation. As the pound continues to lose value, the cost of imports rises, driving inflation higher. This creates a difficult challenge for the Bank of England, which had hoped to ease monetary policy by lowering interest rates. Instead, it may be forced to maintain or even raise rates to combat rising prices, a move that could stifle economic growth further. Investor confidence is another critical issue. Global fund managers have been selling off UK bonds, driving their prices down and yields up. This exodus reflects a growing lack of faith in the UK's economic stability and government policy. The result is a vicious cycle. As confidence wanes, borrowing costs rise, making it even harder for the government to manage its growing debt. For the Labour government, these economic challenges have profound political ramifications. Their decision to avoid raising taxes has won them some short-term favor, but it has also limited their ability to address the fiscal crisis. If the current strategy proves unsustainable, they may be forced to implement austerity measures to bring spending under control. Such measures, while potentially necessary, are likely to be deeply unpopular with voters and could erode public support for the government, creating a political crisis on top of the economic one. Ultimately, the UK is at a critical crossroads. The interplay of a falling pound, rising debt, and faltering growth has created a volatile situation with no easy solutions. How the government responds in the coming months will determine not only the future of its economy, but also its position on the global stage. Conclusion: a testing time for the UK. The British pound's decline isn't just about exchange rates. It's a symptom of larger economic challenges. With GDP falling, debt rising, and inflation creeping back up, the UK faces a perfect storm of issues. For the new Labour government, the path forward is fraught with tough decisions. Can they stabilize the economy without alienating voters? Only time will tell, but the stakes couldn't be higher. Thanks for watching today's episode. If you found this explanation helpful, please give it a thumbs up and share your thoughts in the comments. Let's keep the conversation going.